So the recording has been started. Now I would like to share with everyone the topic for today's discussion is role of digital transformation in the sector. So now I would like to ask our panelists if they can please share what they think of role of digital transformation in growth of BFSI sector. Request Mr. Vishal Singh sir to share their thoughts with us.
I think in BFSI, we can see the transformation which has happened in terms of digital transformation. UPI played a big role in doing this. If you see the transactions across the industry also has been going that way, where most of the transactions now have moved out of branch-based transactions to digital transactions. The channel transactions of internet banking, mobile banking have also grown considerably compared to branch-based transactions. We have also seen footfalls in the branches across banks going down. A lot of industry leaders also have talked about having smaller branches because the footfalls have not been there. So I think the measure has been there across to move to digital transactions in terms of branch banking first, and then also we are seeing all these fintechs who have come in for lending. So a lot of the lending also has moved to the fintech side. Certain pockets of lending which still remains while digitized but still remains more of digital is on the collateral side, which is housings and all. But other which are typically we call it unsecured lendings have all moved to digital side. May it be decision making as well as for the other part of it.
Sir, thank you so much for sharing this with us. Now I would request sir to if he can share something with us on this.
So thanks for the opportunity, Bijal. I think belonging to a broking background, I would talk more about how digital has impacted our broking sector. And I think there are a few numbers which are thrown out, very casually, and the numbers speak for themselves. So I would like to start with quoting a few numbers. Back in 2016, when the digital was at its nascent stage, India stood at 25 million demat accounts, and in the next 5 years, we have opened more than 70 million accounts, and currently we are standing at 96 million accounts as of June 2022. So we have achieved a run rate of 2.5 million accounts every month, while at the start of this digital transformation we were sitting at 25 million accounts in a history of 25 years, right? So that itself speaks of how digital has transformed the way the brands interact with the customers and the way customers expect out of brands. So what it has done for, what it has done for our industry is that it has reduced the cost of reaching our customers, that is increasing the market pie for the entire industry. It has reduced the cost of onboarding these customers. So when I say onboarding these customers, the cost is in terms of monetary cost, and in terms of efforts, in terms of time it takes to onboard these customers. And then when we talk of servicing these customers, the expectations of these customers have completely changed. So when brands interact with these customers, the customers are not happy with just accepting what the brand has to offer. The customers' expectations are, they are designed by their usage of Zomatos, Ubers, and Netflix and everything. So this digital customer, it forces the banks, it forces the financial institutions, it forces the brokers like us, investment partners like us, to think digital, to provide them services in a manner that they want. Gone are the days when a bank or a broker could say, okay, this is what we have to offer and this is what you have to take. You either take it or leave it. These days the customer demands that, boss, this is the X that I'm getting from somewhere else and this is what I expect out of you. So that is where the digital transformation has revolutionized the way the brands and the customers interact with each other. And I think that is where most of the companies are focused on. Rather than serving what they have, they need to they need to serve what the customer wants.
Okay, sir. Thank you so much. Now I would like to request Vishweshwaran sir if they can share with us something on this.
Sure. Thank you so much. Thanks, Vishal and Parth. I mean, you have covered most of the points. where digital transformation, why we are getting into digital transformation in the BFSI sector. I will continue from what Parth has mentioned, right? Why an institution gets into transformation? Primarily because their customers have changed, right? And why do the customers change? Because customers, like earlier, it used to be like the thinking that the understanding of the BFSI is that we are introducing technology to the customers. That used to be the trend, probably say somewhere between 99 to till about say 2010 or so. And afterwards, the customers have started becoming going up the curve. They are leading the customers. I mean, they are leading the institution and they softly demand, saying that I would like to have my services delivered in the channel which I prefer to use, not visit your bank branch or not call your call center and wait forever in the IVR menu, right? Today they expect ready services to be offered through, for example, it could be a mobile channel on maybe a conversational interface. And today the banks or I would generally say BFSI need to adapt to what the customers are demanding today. So the second factor, uh, which is kind of leading the digital transformation, is the technology, the way the technology is changing and shaping our lives. Right? I'm talking about retail consumer tech. I'm not even getting into the technology like a cloud or something which we don't even get to see. But the retail technology we are talking about, which we are using every day, everyone is using, could be a 4G telecom. The way 4G came, it has totally dramatically altered the way people do the transactions. When it comes to the way the interactions happen, the interfaces which were used earlier, they all have been changed now. Today we talk about video banking because there is bandwidth available in every nook and corner of the country. 95% of the country is covered with 4G network. So which is making such interactions like we all do on a virtual mode. These kind of conversations are possible because the technology is allowing us to do it. In future, when 5G comes, we really don't know how things are going to change, right? It could be like we are talking about real-time communications, real-time payments, real-time gathering of data and trying to outguess what the customer is trying to do. I mean, God knows how things are going to change. And today we are trying to wrap our mind and try to figure out what level of transformation our organizations need to be ready with when new tech like 5G is getting rolled out. I mean, this is like anybody's guess. I mean, it's a matter of hit or miss, but we need to make the jump, leap of faith, get into the new technology and try and see how the transformation is going to impact the organization retrospectively. Only time will tell whether we are able to, normally people say, right, the vision is 2020 when you look backwards, right? Only time will tell whether the decisions, whatever we are taking now, the transformation journeys we are undertaking, are they intending the right path and giving the right results to the organization as well as to the customers whom we represent. Thank you.
Thank you so much. It was really insightful. Now I would like to ask the second question, that would be like, how has digital transformation impacted your organization, and what are the innovation practices being adapted by your organization to overcome those impacts? So if Vishal sir can begin.
I think as Surodaya, we serve the most underprivileged society. Our basic customer base is coming from that level. We have seen some bit of digitization or transformation in that segment also. And as Vishwanath said, basically everybody has a mobile now. All the households have mobile. They have connectivity, and most of these guys are on GPay, PhonePe kind of platforms. So. And I think what COVID did was COVID just fast-tracked the journey. So the journey which should have taken 5-6 years to happen, which should eventually have happened, just took 2 years to happen, just because everybody was not able to meet. So you had to eventually go digital. For that segment also, where everything was cash collections and all, we were able to see around 20-30% of our collections coming through digital means, where the customers have never used. We thought that they don't have mobiles, they don't have connectivity. There we were seeing 30% collections coming out through digital means. Every household which we surveyed after the COVID also came out to be having somebody in the member using a PhonePe or a UPI. So for us, it's important that we the way the masses have transformed, our journey also has transformed that way. Now we are looking at giving more solutions online to these customers. We launched a product for this segment also, where we said that let's give a digital loan to them. So end-to-end digital loans given to the pre-approved customer, which was earlier given by meeting those customers, has become complete digital. So that's one change which we are seeing across the one branch. As I said earlier, also branch footfall has just fallen. We are not seeing anything out over there. The volumes on our side also for UPI would have grown some 10 times from last 1 year. So where we were 1 year back or say 2 years back, it's just growing 10 times every year, and that's what correlates with digital transformation. So we're up the curve over there. I think where we are now getting into is getting into open banking space. We have invested a lot on that area, created our open banking structure, integrating the fintechs out to our platforms, and moving to the next layer is more rule-based credit decisioning. I think that's one area where we want to move to, put in a lot of AI/MLs to start decisioning on the lending part for the segment which you are doing. Thank you.
Now, Parth, sir, if you can say something.
So I would start with, once again, I'll start with numbers, and I would say that, the digital transformation, what it has done is it has given us a massive scale that, that was unprecedented back in 2015, 2016. So if I remember the numbers correctly, back when I joined the broking industry, a broker opening 2,000 accounts a month used to be celebrated. I mean, we used to get cakes, and we used to have, dinner parties when we opened 2,000 accounts in a month. And with the digital transformation, 50,000 accounts a month is just a game, like it's just a child's play to get 50,000 accounts a month. What digital transformation has done is, it has completely shifted our demographic mix of customers, and it has completely shifted our business model as well. So back in 2015, probably 5% of the account used to come through the digital modes. Currently, we boast of almost 99% of the accounts, being open through the digital channels. And out of the 60% of the customers, they are reaching out to us on a digital channel. So what it has done is, it has helped us reach the hinterlands of the country. My employee sitting in Mumbai can, serve a customer who's sitting in probably in Nagaland. So that is the kind of, scale we are talking about. Secondly, what this has done is it has forced the company to adopt an app-first approach. The customers that we are onboarding, they are in the age group of 20 years to 30 years. Most of the customers are coming from T2 and T3 cities, and these guys, they are more comfortable with apps rather than the desktop versions of our services. So it has forced the company to adopt an app first approach. It has forced our company to think of how the user interface is going to be, how the user experience is going to be. So that is where the customer is demanding that this is the kind of UI and UX that I need. What it has forced us to do is it has forced us to take an educational approach, take a vernacular approach. I think that is one point that we usually miss out when we talk about digital transformation. I think the customers have now started demanding services in the vernacular languages, and that is where our focus has to shift to vernacular approach. Our focus has to be educational more than pushing our products. And what it has done is it has also forced us to rethink our products because the cost of servicing has gone down. Now it has enabled us to, to launch low cost products or low ticket size products. For example, our organization recently launched a rupees 250 rupees investment basket. So as an organization, I would not be making any profit out of this particular product if a customer bought this product if it was 2015. But now that the cost of onboarding, cost of servicing has gone down, it has made such low ticket products profitable for the organizations, and we have restarted thinking about how low can we go in terms of ticket size. And one more important point would be the analytics. The customer now expects you to understand him more than he knows himself. He expects you to know everything about him. So we have started building analytics models wherein we are able to predict which customer is going to trade tomorrow, which customer will need which particular product, which is the best product and customer fit, which customer is more likely to close his account and go to my competitor, the churn analytics. So this is where technology and the data collection that we are able to do, that is helping us understand our customers better and provide them a more personalized service. So that is where digital transformation has brought us. And what our company is doing is obviously tying up with educational institutes like you, which provide a corporate connect between the startups and the industry, which helps us leverage and piggyback on the agility of the startups. It helps us reduce our turnaround time of the products that we want to introduce to our customers. So I think corporate connect programs and internal innovation challenges like hackathons and everything, that is what helps us stay afloat in this market, because changing every day, that is the table stakes. It's not anymore you get an age by changing every day. You have to change every day to survive in this world.
Yes, sir. Thank you so much. Now I would request Vishweshwaran sir if you can also throw some light on this question.
Okay, I'll give a little bit of context and history to the organization I represent, Tamil Nadu Mercantile Bank. This bank is more than 100 years old. Which today we are talking about 102 years exactly, right? So kind of stepping into 102nd year of existence, the bank had taken a lot of pride in terms of providing services through the branch banking network. So today, when I talk about it, we may not have a great scale. We have about 510 branches, and majority of our business, about 80% of the business is focused in Tamil Nadu itself, right? Today, we have customers who are from the fifth generation, right? Fourth generation, fifth generation, that level of loyalty we were able to cultivate. And those are the customers we take a lot of pride in terms of having as our customers. But having said that, we also see a huge transition in which, uh, the customers of these days, the current days, the Gen Z generation or the millennials, we could see a marked level of change in the way they are transacting, right? Today, they don't take, they don't value, say, as much as the previous generation did for branch banking. So today, we are also adapting ourselves to what our customers are expecting to become a mobile first generation, right? And our journey into the digital transformation started much later. I mean, one of the reasons I have joined the bank about 10 months back is to spearhead the digital transformation initiatives and bring the bank up the curve in terms of technology adoption, in terms of transformation initiatives vis-a-vis the rest of the industry, right? Being a latecomer is not an advantage at all, disadvantage at all, primarily because the moment we are able to start late, right? We don't have to necessarily go through all the necessary hoops of transformation, make the mistakes what my peer banks or peer organizations do. Rather, I can quickly leapfrog to the latest tech, right? And bring in the latest technology, latest products, or latest tools, right, to provide services to our customers. So one such lever I'm using in terms of initiating the digital transformation is not trying to build the products ourselves, but take the help from fintechs, especially whose expertise lays in bringing the latest tech, latest, the best user experience for our customers, and at the same time offer great reliability of their services. And I kind of keep seeking source the partners, the right partners, the right fintechs who has got the right product mix, what our customers want, and try to align ourselves to the fintech products. So we are riding on the fintech strength of bringing in latest technology, great user experience, and in terms of providing very consistent level of services. At the back end, the bank is willing to provide the necessary, the support for the fintech in terms of getting the regulatory approved partner. I mean, essentially, the bank takes care of all the regulatory and compliance requirement, as well as we are also giving the opportunity for the fintech to work with our customer base. So it kind of win-win for both of us. So that's the level of that's the kind of strategy we are using for transformation. Having said that, we have just started the transformation journey. It will take about at least a year to really catch up with the rest of the industry. Thank you.
Yes, sir. Thank you. Now, one question that we got right now is startup wanted to know that which areas and where of this organization needs startups help. What a role startup can play. If Vishal sir can begin with it.
I think startups, as Visheshwar also said, we are also looking at a lot of fintechs, startups to come in because they bring in all the fresh air. One is they are pretty focused in what they do. As an organization, we might be focused on 10 things, but they're always focused on a single area, and that helps us in deriving. So we are looking at startups, fintechs, to more on the side of analytics right now, or basically AIs to underwrite and also digitize. So basically, a lot of processes as being a old bank, old microfinance, and then a bank. We had a lot of processes which are manual going on for legacy time. So how do we automate them, and also how do we bring in those experiences for the customers whom we are serving right now through a lot of underwriting capabilities, which frankly we are looking at right now to onboard folks. That's the area we're looking at.
Parth, sir, now if you can share something.
So I think for us we don't really differentiate between startups across the value chain of a customer's life cycle. So for us, we are sector agnostic in terms of what the startup is offering. Uh, there are two ways we engage with startups. One is we take strategic stakes in the startups that we are interested in, which show some promise of growing in the future. And the second is we work with startups to to provide a particular service to us, or particular product or service to us. So right from starting from marketing, wherein we are reaching out to our customers, the first phase of a customer's life cycle, wherein we are reaching out to our customers. So we entertain startups who are in the marketing domain, marketing analytics, lead generation. Once we reach the sales funnel, once the customer reaches our sales funnel, there are startups like with whom we engage for analytics in terms of arriving at a probability of a particular lead to convert. How do I engage with this customer till how do I engage with this lead till this particular lead is converted into a customer? So prospect engagement, communications, that is where some startups come in. Once the customer is onboarded, right? We work with multiple startups on the user interface and user experience domain, customer behavior domain, wherein we try to understand each customer in detail. We try to replicate what one successful customer has done for 100 other new customers. So that is where analytics comes in. We also work with startups in the domain of customer servicing, wherein chatbots, AI, uh, NL and ML come in, right? NLP and ML come in. So we work with startups across the spectrum. There is no specific use case that we work with. We rather expect the startup to tell us what they are doing, and we see if their whatever domain they are working in, whether it fits our business case, and that is how we onboard startups.
Thank you, Parth, sir. Now I would request Vishweshwaran, sir, if he can also share about this question.
In fact, I would say that our engagement with startups is towards on the more mature startups. I would rather say fintechs, essentially. Fintechs who have been there, established for a while, who could be going towards Series A kind of. The reason primarily being is that being a bank, we don't have too much of resources to kind of engage with multiple startups at the same time and try to co-create products around. Today, our primary objective, as I mentioned earlier, is that we need to leapfrog in terms of the transformation journey. So, which means we are looking at a fitment, like what the fintech, I would say fintech or startup, kinds of brings to the table. Essentially, what kind of win-win we can create along with them, right? It could be a great platform, or it could be a great tested, proven technology stack what they're kind of bringing in, right? And at the same time, we are also looking at expanding, using the startups for primarily for the market bit, which is certainly not a bank's core domain area. Essentially, the marketing technology, which could be analytics, digital marketing, right, and creating products, how we can kind of take it to the customers, run campaigns, look at the results, segmentation of the customers, and how do I reach out to the customer and keep them engaged so that I can run a sustained continual business with them. So essentially, if I look at it, my approach towards looking at startups are primarily in the area of platforms where we don't have their products in our portfolio, so we will be able to use their technology stack and leverage them. It could be in the cards domain, or it could be, even in the area of digital distribution. Tomorrow we may come up with For example, the scale in which a startup can scale or a fintech can scale in terms of reaching out to the customers and distribute our products, we would definitely like to ride on it. Third area I mentioned is on the analytics front, analytics as well as the digital marketing front. Together, I call it as marketing. Okay, these are the three areas we essentially look at startups. Fundamentally, we look at can we create a win-win between both of us? That will be the fundamental driver which we would like to see. Can I create a win-win proposition so that end of the day, the bank's customer is the one who's kind of benefiting with the relationship, whatever I'm signing. So in a way, I would say that we are not in the stage where we can experiment in saying that, chalo, try more times, right? With a startup and see it works, it doesn't work, it doesn't work. We have not reached that level of maturity, like could be Parth or Vishal their organizations have reached in the level of transformation. Today, we are kind of quickly getting the more successful fintechs who have got the right kind of product mix, which is kind of missing in our bouquet. Those things we are trying to plug it very quickly and come up the curve. That probably maybe financial year 23-24 or 24-25, that's when I will be able to engage with startups with a more open end. Thank you, Bijay.
Thank you, sir. Now I would like to ask panelists if they want to add something to this topic, they can. Okay. Okay. So I think it was really insightful for getting such a good amount of information on this topic. Now I would like to open a question and answer round with our startups. So if any of the participants have any question, they can raise their hand and ask. Yes, Sudhapalli sir, you can ask. You can go ahead with your question.
Hi, sir. Good morning. Myself, Sudhapalli JP Rao. I represent Wisergo Software. We are basically a low-code platform company. I myself am an experienced banking professional for over 15 years in both the business loans, consumer finance, and of course the rural agri loans. My question to you, sir, when you look at the IT spending, I think the financial services happens to be the major in terms of IT spending globally, in the range of around 4 to 11% of the total revenues. So there is a lot of investment that's happening because we see the advantages, the BFSI sector per se. However, now while the investment is going mostly into the software, the legacy kind of software, I've observed that there are a lot of use case scenarios where there is applications can be built using a simple technology like low code, which helps in giving a lot of benefits in terms of the faster go to market and in terms of revenue per user and even the expenditure reduction in the expenditure per user. So as such, in your organizations, where do you see the low code thing benefiting? Like, you have any use case scenarios where you are feeling or you are exploring of using low code platform in the coming years and also?
I'll answer the.
Yeah, go ahead.
So, Sudhapalli, thanks. So I think I'll take my bank's example over here. So we went through a large transformation just now where actually we have replaced a lot of our old solutions and migrated to some new solutions which are up the curve rather than the old legacy ones. I think where we are still not there as an organization is building ourselves. I think a lot of the banks still believe in, or the banks in which category we belong to, all still believe in buying solutions, having vendors doing that work for you, rather than you sitting down and coding and putting something on the table. And that's what a differentiator right now between a fintech and a bank is right now, where fintechs actually put in on the platforms with the user experience. traditionally banks have not done that. The larger banks have moved a bit over there, but still they are on platforms where they have resources from the vendors and doing it. Over a period, I think it will change because as you also start competing and coexisting with the fintechs to give that user experience, because the management demand will come in saying that why we can't give the same experience as what the XYG is giving, and hence that will bring in more changes. I think for me personally, we should be getting into it from next year onwards, not this year, because this year for us would be more of stabilization of what we have done till now. We've changed a lot of applications of ours, so we'll ride on what we have. As I said, we have built a very robust open banking platform. So we will ride on it to get in the fintechs to give the products which we are missing in our ecosystem. And the next phase of it would be learning from them and also creating your own systems, which definitely has to be something on no code, because you can't have those army of people sitting and coding in a bank, because fundamentally you can't give a career path to those guys also if you start doing it. So I think for us it's going next year, March, April, when we start looking into this area. If I answer the question.
I mean, to add my perspective over and above what Mr. Vishal has said, most of the banks we are dependent on vendors. Yes, especially it could be a core banking or it could be any of the software which is essentially running the bank. I'm sure as a ex-banker you are very well aware, right? So in this case, the low code or no code, these kind of technologies need to be adapted by the vendors, and vendors in turn need to feed into the bank. For us, the bank, since we are not touching a line of code, right, or even doing debugging or testing or any of those stuff. So for a bank, it really doesn't matter whether it's a low code or no code, right? At the same time, I'm not pouring water into the low code or no code tech stack which is coming in. Where it can really help is that banks who have got the capabilities for development in-house, right? Again, it's a matter of culture. It's a matter of organization culture, or you can call it as an overall strategy, whether to build products in-house, right? To create competitive differentiation or try to have more control over what can be offered or bring in more agility into the whole tech. I mean, essentially, there is no right or wrong to this whole ideology of whether to do it in-house or do it through an external vendorized development, right? When the bank is trying to build application in-house, that is where this low code or no code environment is really going to play, really going to help, right? At the same time, we also need to look at the cost of implementing a low code platform over building everything from the scratch, right? The low code platform, the cost of investing into a low code platform is going to be much more expensive, right? Compared to build everything from ground up, right? Build the entire whole stack from ground up, right? The bank may still stick around with the traditional way of coding, right? It could be Java, it could be React, it could be any of the latest tech or Rust or anything we are talking about. But essentially, it's a matter of what is the ROI we are going to get by investing into those platforms. So per se, none of the banks are ever going to be averse to any new tech which is going to come. Finally, the bottom line for any IT is that what is the ROI it is going to give it back to the bank. Is it going to help me build products faster? Is it bringing in sufficient level of agility, right? Or is it addressing all the performance issues of a legacy system, right? That is what is going to really decide whether the bank needs to looking at a low code platform or anything else. And especially a low code platform may not be the one which is suitable for a very highly dynamic scenario, right? It can be used for replacing your legacy application, right? Which is there, which is stable, which we know that the boundaries, the scope is very well defined. Maybe the bank can take a leap and say, so let me replace my traditional app, which was built maybe 10 years, 15 years, 20 years back, with a platform which is little futuristic, which could be a low code platform. Rather than doing what is available right now, I would rather try to do what is going to become the mainstream platform over a period of next few years, right? If you're trying to expect that a low code platform is going to be used for building in very dynamic product, which is bringing in a lot of changes, something, for example, like an UPI application, it may not fly really because there are too many changes happening. And what is more important is that the availability of resources who can really do the coding. right? We can get a developer for could be a React or Angular or a Java, JavaScript, any of those family very easily. Getting a people hired is much more easier. The moment I try to go commit myself to a very low code platform, getting those resources could be expensive, and it is very difficult to get an alternate replacement as well. Now that the attrition is going through the roof, right? So the bank, from a bank point of view, the objective, the way we look at technology is quite different. When we switch the sides from a developer, vendor, or a fintech side, when you switch to the bank side, the way we look at is stability, predictability, and to an extent, this should not be like something which is like a flash in the pan types. We would like to see so that the technology is here to stay, the support is available. We are able to realize our investments, whatever we are making into the product, and that is what is going to decide. I think that was fairly a longer answer.
Okay, sir, got it.
Okay. So hope your question has been answered. Now I would like to request Gautam, if you have any question, you can go ahead.
Hi, good morning, everyone. This is very insightful. Thank you, Vishweshwar and Parth, Vishal. My name is Gautam Kumar. I'm from Senseforth.ai. We are a conversational AI firm. We build AI-powered virtual assistants. So the question is very simple, but at the same time, it is very important for companies like us to understand the key challenges that you may be facing with the current chatbot solutions, or if you have not implemented any bot solution for the customers as well as for your internal customers, then what would you expect from a superb solution standpoint?
I think I would take that, given the kind of bad experiences we have had with chatbots. I think probably everyone would agree that when we speak about AI ML, it is pretty much hyped up because in India, India is such a country with so many languages, so many of same. Uh, Sorry, I'm getting some echo back from. Anyways, yeah. So what I was saying is India is such a difficult country, and the kind of customers that we get. The moment you give a conversational chat experience to a customer, the thing is you cannot predict what the customer is going to say, and the second thing is you cannot expect your bot to understand what the customer is going to say. So we have been using chatbots since 2015, 2016, when the chatbots were available on Facebook Messenger. We have had a chatbot on our website. We have had a chatbot on our app. What we have observed is that when it's a simple chatbot which replicates an IVR, or which clearly defines what the customer can do. Once you clearly define what the customer can do with a particular question or with a particular action, that is where the chatbots work really well. But the moment you open up the conversation to just letting the customer say or type whatever he wants to, I think it's a chaos out there. However, I'm happy that we are developing a humanoid as well. So we are taking it a step forward and saying that move over chatbots. It's time where voice bots are taking over, and let's have humanoids replacing the human agents. So that is where we are at currently. But yeah, I would say it's a mixed bag of experience with chatbots, and all the companies would agree on that.
Correct.
Okay.
I mean,
Adding more to what Parth has said, right? The need of the hour is to, I mean, India is such a diverse country, right? If we go 100 kilometers, you have a change of language, culture, topography, everything. The challenge today is that when we try to talk about a chatbot, are we able to create one in a vernacular language, right? While there are a lot of effort which has gone into creating the English language adaptation, right, as well as the Hindi text, which is kind of more or less closer to a human experience. When it comes to regional language, we are very far away from it. Even though there are libraries available from many of the voice bots or many of those techs available, but still the customer experience is still not matching. And like how Partha said, it is very, very difficult to really say what it is difficult to put a clear boundary as to what is the type of question a customer is going to ask. If the customer goes out of the scope, right, suddenly the bot doesn't have an answer, and the experience tanks thereafter. Right. So in fact, the way we can look at is the way we are looking at the evolution happening is that with Alexas of the world and Googles of the world, Google Assistants of the world coming in, we may soon expect the voice-based, the conversational bots are going to take prominence, because the amount of data what these companies have been gathering, analyzing, and creating queries is like way, way high. And like any other tech, the tech is actually waiting for the customer to order. Right. So the conversational bot as an experience, right, it is waiting for the right kind of sunshine moment, right, to see the technology matching the consumer's need. I think it's a matter of time. Right. I mean, I can give a classic example. How long it took us for us to replace a typewriter, which has been in existence for say 50 plus years, or probably more, right? And suddenly we find that typewriters are gone. It's nowhere there. There was a brief period where we had something called as an electronic typewriter, and immediately people switched to word processor. And today, I mean, there are a lot of dictaphones available where people can say it on the phone and it converts that into chat. And that's the way things are evolving in terms of user interfaces. And if you look at whether from one evolution to the next evolution, did it take 40, 50 years? No, it doesn't. It takes just 2 years, 3 years time, and people quickly are updated.
Correct. No, thank you. I remember my elder brother, he used to go to take typewriting classes long back. So I can relate to that. No, thank you so much. I mean, I do agree. It's a continuous, in my opinion, it's a continuous learning process for the bots. Bots are just the machines. There has to be a human who has to train the bot on a continuous basis. Like, for example, SDFC EVA that is built by us. Considered to be world's largest banking bot, just from the volume perspective, about 16 million queries every month, transaction. In fact, it has become so intelligent over a period of time. I think we started the business with them in 2017. In over 4 or 5 years time frame, it has become second largest channel for their sales engine, generating about 50,000 leads, so on and so forth. I mean, vernacular language is also very, very important. Yes, there are APIs available. Google is efficient enough. Companies like us, we have our own SKT and ASR engine. For example, Umang, Government of India project, we are building their bot. And if that's built, I mean, we have already implemented 14, 15 services, and that is supposed to be in vernacular intelligence. So over 200 plus citizen services are going to be implemented using that chatbot and voice bot along with the IVR. The expectation is provide all languages available in India, and which we have agreed for. Yes, it is very, very initial phase incubation period. We may have done English, Hindi, maybe Marathi, maybe Malayalam, but all the dialects, all the accents, MTIs, yes, it will take some time for sure. But thank you so much. It was good, insightful. Thank you.
So Manoj, you can go ahead with your question.
Hi everyone, this is Manoj. I'm a founder of an AI company called Orbo AI. We're basically an AI infrastructure company. We build a lot of building blocks which are currently used by some of the leading fintech companies, including Perfios to Karzas. And we also now started working directly with the financial organization after realizing the importance of our infrastructure capabilities, working with some of the largest banks like HDFC, Kotak, and so on and so forth across India as well as in the US. My question, slightly different. While we do a lot of, digital transformation and rather bringing automation to mundane processes, be it, loan processing, be it risk and assessment, and so on and so forth. The majority of the leading fintech companies have focused on the low-hanging fruit, which is the front-end account onboarding or KYC and verification and so on and so forth. But there's 80 to 90% of the work still happens on the offline channels, and the data is actually coming through agents. It is coming through various, maybe a WhatsApp, maybe a series of different channels. And one thing that is probably has not been thought through, and we've experienced that, how do we really protect the customer data? Because somebody's combining that data into PDF files, sending it to you. Somebody is sending it through WhatsApp messages. Those agents are taking scan photos of that, and then they are sending it. They're heavily degraded documents that comes to the bank, and that increases a larger portion of work on the banks on the offline element. How much ever the digital portion that comes to you, that the OCR will probably manage 60 to 70% of your digitization. The rest 30 to 40% still goes into manual keying. That means your BPO centers, your call centers, or your internal team, which is sitting and manually keying that data for you. Now, what is your take on those things? And how can we look at the privacy of data of customer? How do we get the best quality of images and documents from these users without them dealing with the agents and bank people, and then increasing the overload of document and then reducing that impact and bringing more digitization from the offline standpoint? So what are your takes on that?
Looks like who's going to go first?
Yeah, I think since it's a bank-related question, probably you would be more qualified to take it. But
Okay.
if I had to, put in a perspective over here, what we are looking for is, we have taken a two-pronged approach to this. One is get it right, get it correct in the first place itself. So whenever we are asking for documents from the customer, what we are trying to do is we are trying to provide checks at the at the level of the customer himself. Whenever he's clicking a picture or whenever he is uploading a document, we place a check over here saying that whether the OCR readable or not, if the image quality is proper or not. So we are trying to reduce the errors at customer's end itself. As long as the document that he's uploading, it is not readable by my OCR, I would prompt him to prompt him twice or thrice to re-upload the document, improve the image quality of the document, educate the customer what sort of document we are expecting. So that takes away 60-70% of my pain. Second, what we are trying to do at our end is we are trying to develop a platform, a conversational platform, wherein it's an environment which is either owned by us or a third party, probably a fintech partner or a conversational partner, wherein the learning curve for the customer has to be minimal. So it has the interface has to be as simple as WhatsApp. Everyone uses WhatsApp these days, right? What we are trying to do is we are trying to govern this platform. We are trying to control control the data that flows over this platform, while giving a look and feel of WhatsApp to the customer, so that the data remains secure, the documents are secure, there is minimal risk of fraud. My agent who gets to see this document has only a read-only access. He doesn't get a PDF or he doesn't get a document directly from the customer. All he receives is a view-only access of this particular PDF or the document the customer has shared, and he can key in the relevant information. So these are the two approaches we have taken. Over to Vishweshwaran sir for more.
Okay, Vishal, I thought Vishal is about to say something.
Yeah, so for us, what we do is while we have these agents on the ground who take in these documents from customers, take pictures and all, we have built in some solutions on MDM sites where typically we create containers in their apps which they're using, made with their own devices which they're using. It creates a container which typically is the MDM solutions. So the data is not ever known to him or not coming over there. You can always run a risk of somebody clicking a photograph from a camera and taking the document. Nobody can stop it. Nobody in the branches can stop it. Nowhere anywhere can stop it. But we are taking for a application. We take utmost care when the application is given. By default, it's MDM enabled so that folks downloading an application for scanning, taking pictures and all gets covered under it. So it becomes secured for us. Internally, we secure it by having all the necessary solutions which are there so that any data leakage which is happening is prevented. Physical documents always remains a risk in terms of as long as they remain physical. As long as they are digitized and are in the system, then all productions can be is possible. But as long as they remain physical, that risk remains out over there. But most of the documents in the organizations have become digital now. Hardly we take anything which is manual now. I think, as I said, apart from those loan documents which are still for collaterals which are coming as manual, I don't think anything else is coming manual now. So I think people have moved long way from those physical. Even the KYC documents are not taken manually now. So that prevents those risk out.
Yeah, I mean, over and above what Partha and Vishal has said, right? Today's regulatory environment, right, related to data privacy is very, very stringent. And it is getting stricter day by day. Like the purpose of using the data, we cannot repurpose the data in terms of making things explicit to the customer, taking their concern at each and every level, storing the consent for the purpose and all the stuff. So if I have to look at the overall infrastructure in which the data moves, the data part which is being regulated, right, that is fairly compliant. I don't think we have got any issues with respect to data being mishandled or data being misappropriated or being misused or anywhere like that. Because we have regular audits happening from the regulator or their appointed agencies. And there is a fair amount of certainty in which we can say that any data, one moment it enters a digital stream inside a regulated entity, like could be a bank, BFSI, anywhere else, the data is fairly secure. But the most worrying part is the place before that, where the initiation of the journey, where things happen. For example, I lived in Mumbai for 14 years. Every society we go, we need to put our name, we put our mobile number. That is a private data. That is being floated, that can be used, abused anywhere else. You go to a, say, a shopping mall, first thing they ask is, "Aapka mobile number bolo." Right? And they want the name as well. They have a card data, they have a mobile number. What else do they want? And how many places are people are asking for Aadhaar chahiye aapko, right? We kind of, freely kind of, distribute our personally identifiable information everywhere, and we expect the government to protect us. Right? Unless and until we have got a mechanism in which data, data about ourselves is, sacred, and it is not something to be freely, traded upon. That's when we can have a foolproof, we can arrest data privacy leaks as well as the PII data being abused and elsewhere. Till such time, it is happening only in pockets.
I think
it's not a whole solution.
I think they probably brought up a key understanding there. I think we need an infrastructure which will work anonymously to verify people rather than sharing. I mean, you're so right. We even give Aadhaar card to rickshawala. I mean, that's how bad the situation is. Yes, Orbo is working on those kind of things where the AI and blockchain will get together to sort of anonymize that data so that everyone, including Google or Facebook, where we laymanly share the data to everyone. But the idea is that how can a human protect the data by itself, and he can only share what he wants to share it. So that's the kind of mechanism wherein Orbo is actually working on it. The second thing is that I think Parth has left the call. I'm not sure if he's there. We've built an AI capability which basically takes low quality documents and it enhances them, brings them to a legibility which then can increases the accuracy of OCR. And that has really been a very disruptive capability. And I understand, Parth, you can imagine if asking user to re-upload the image 2 or 3 times, they really get annoyed with that. The second part is that oftentimes the bank actually put a specification that the photo has to be 300 by 300 only. Now there are tier 2, tier 3, tier 4 cities customers. They don't know how to compress the image. They don't know how to resize the image. That has to happen automatically. And those are the kind of problems that we've understood. We're trying to bring the standardization into that in-tech side, which Vishweswaran sir has mentioned, that at the point of entry, how can you really sort of regularize, standardize the capture capability and then bring it to the ecosystem, which then becomes much streamlined. The other systems and other processes then become completely obsolete, because once you sort that problem, everything else sort of falls into a place. But great, thank you so much for your insight. We would definitely connect with you offline, and we'll explore synergies as we may feel appropriate for you. Thank you so much
Sure.
for your.
Thank you, Manoj.
If anyone has any question, they can go ahead. Okay. So there are no other questions, I think. So now I would like to take a moment and thank all three of our panelists, Mr. Vishal sir, Parth sir, and Vishweshwaran sir, to join us today for this event. It was really insightful. Even I would like to thank all of our startups who joined today for this event. Thank you so much.
Thank you, Bijal.
Thank you, sir.
Thank you guys. Have a wonderful day.
Thank you.
Thank
Have a
you so
nice
much.
weekend.
It's fine.
Yeah? How was the call?
It was good. There were around 10 to 11 startups today.